What if I told you that silver is no longer just a metal, but a weapon in a global power game? And what if I told you that the next major move has already been triggered, quietly, and most people have completely missed it? This is not hype. This is policy. This is power. And this is about money. Welcome back to Stockora. If you want to stay ahead of the biggest financial and geopolitical shifts before they hit the headlines, make sure you subscribe right now, because what you're about to hear could completely change how you look at silver in 2026. Here's the truth. Silver is no longer being treated like a commodity. It's being treated like a strategic asset. And Donald Trump has made that crystal clear. Just a few hours ago, a new trade development involving India slipped under the radar, but it fits perfectly into a much bigger picture. A picture that revolves around tariffs, national security, and one very powerful legal tool called Section 232. When Trump signed his latest proclamation, he didn't just make a statement, he started a countdown, a real one, a clock that, once it runs out, gives the president authority to completely reshape the silver market in the United States. And once that window closes, the opportunity closes with it. That's why this video matters. Because by the end of this video, you'll understand not only what's happening, but why the smartest money is already positioning for what comes next. To understand silver, you first need to understand Trump's economic playbook. It hasn't changed. He's been running the same strategy for years, and it has three core pillars. First, use tariffs as leverage to force better trade deals. Second, bring critical manufacturing and supply chains back to the United States. And third, reduce dependence on China for anything that matters strategically. We've already seen this exact playbook used on steel, aluminum, semiconductors, and rare earth elements. First, declare it a national security issue, then threaten trade restrictions, then force negotiations, and finally, restructure the supply chain in America's favor. Now silver has officially been added to that list. On January 14th, Trump invoked Section 232 of the Trade Expansion Act, the same authority he used in the past to reshape steel and aluminum markets, and declared silver a critical mineral essential to national security. That wasn't symbolic. That was a warning shot. Section 232 gives the president extraordinary power. Power to impose tariffs, power to restrict imports, power to set quotas. But the most misunderstood tool of all is something called a minimum import price. And this is where things get really interesting. A minimum import price is exactly what it sounds like. The government sets a price floor for silver entering the United States. If global silver is trading at, let's say, $80, but the US sets a floor at $100, importers either pay the higher price or get hit with tariffs on the difference. The numbers don't matter, the mechanism does. Why would Trump want that? Because it changes everything. It immediately protects US miners by allowing domestic producers to compete without being undercut by cheap foreign supply. Projects that were barely profitable suddenly make sense. Investment flows in. Jobs are created. Domestic supply grows. At the same time, it reduces foreign dependence. The United States imports massive amounts of silver, mainly from Mexico, Peru, and China. Adding a premium to imports makes domestic production far more attractive. And then there's leverage, classic Trump leverage. The threat alone can force other countries to renegotiate trade terms. It's not about using the hammer, it's about holding it. There's also revenue. Every ounce imported under a price floor generates tariff income. And finally, there's China. If China attempts to restrict silver exports or manipulate supply, the US would already be insulated with a domestic price structure that supports local production. This is a fundamental shift. For decades, corporations pushed both political parties to keep import barriers as low as possible. Cheap imports meant higher profits and lower consumer prices, but the long-term cost was devastating. Hollowed out industries and dangerous dependence on foreign supply chains, especially China. Silver exposes that weakness. And that's why Trump is targeting it now, Silver has been running a supply deficit for 5 straight years. According to industry data, the cumulative shortfall is over 800 million ounces. This is not temporary, it's structural. And what makes silver unique is that around 70% of global production comes as a byproduct of mining other metals like copper, zinc, and gold. You can't just turn silver production on and off. That means supply is inelastic. It can't respond quickly to price increases. So when you restrict imports while demand keeps rising, you create pressure. And demand is exploding. Military systems, medical technology, AI data centers, clean energy, every advanced technology relies on silver. From a national security perspective, silver checks every box: constrained supply, rising demand, foreign dependence, strategic importance. That's exactly why it was designated as critical. And that designation gives political cover to act aggressively. Now, there's another layer most people don't understand. Governments and financial institutions have historically tried to suppress silver prices. Why? Because higher silver prices raise production costs across the economy, fueling inflation. And more importantly, rising silver prices expose the weakness of fiat currency. As silver rises, people start questioning the value of paper money. That's uncomfortable for governments. But here's the key shift. You can't suppress silver while simultaneously trying to rebuild domestic supply chains. Those two goals contradict each other. The suppression era is ending, and that creates powerful tailwinds. Now, let's talk about the recent crash. Yes, silver dropped sharply, but this wasn't a fundamental breakdown. It was a leverage unwind, triggered by shifting Fed expectations, a stronger dollar outlook, and forced liquidations in futures and options markets. The thesis didn't change. If anything, lower prices strengthen the political argument for protecting domestic producers. And that brings us to timing, because dates matter. July 13th, 2026. That's the date markets need to remember. It marks exactly 180 days from Trump's January proclamation. That's the deadline for the Commerce Department to complete its Section 232 investigation and deliver recommendations. After that, Trump can act. Tariffs, quotas, price floors, everything is on the table. Between now and then, volatility is likely to increase. Smart money doesn't wait for headlines. It positions early, and we're not done yet. Because there's a second piece of this story that could reshape the entire critical minerals landscape in the United States. Stay with me. As we move closer to mid-2026, multiple catalysts are lining up at the same time. The State Department is hosting its first ever critical minerals ministerial. The Federal Reserve has several key meetings that could shake the dollar and precious metals markets. And the Silver Institute is preparing to release another global supply report, one that could confirm yet another massive deficit. On top of that, physical silver markets are entering key delivery months: March, May, and most importantly, July, which lines up perfectly with the Section 232 deadline. If there's stress in the system, it will show up there first. This is why long-term silver investors are paying close attention right now, not because of hype, but because policy, supply, and demand are all moving in the same direction. And this brings us to the sponsored segment of today's video. Now, this is not financial advice. Always do your own research. You are responsible for your own decisions. Volato Group, trading under the ticker SOAR on the NYSE American, is planning to acquire M2I Global, a company focused on building a full-spectrum critical mineral supply chain inside the United States. If the merger closes, it represents a major strategic shift into one of the most important sectors of the next decade. Here's the reality. China controls over 70% of global critical mineral processing. The U.S. is import-reliant on 40 critical minerals, with zero domestic production for many of them. Even minerals mined in friendly countries often end up processed in China, and China has already weaponized that dominance. Export restrictions, supply manipulation, strategic choke points. M2I Global is attempting to change that. They're building what could become the nation's first dedicated critical minerals reserve, headquartered at a federal facility in Nevada. The goal is storage, refining, tracking, and distribution, all inside the U.S. Their platform connects supply to end users through traceable systems. On the sourcing side, they've established partnerships with Australian mining operations for copper, gallium, titanium, graphite, and more. Including non-Chinese sources of materials the U.S. currently cannot produce domestically. They've also identified nearly 20 shovel-ready projects across multiple states, designed for rapid activation if policy and funding align. Leadership matters in this space. The team behind M2I includes executives with experience scaling companies from small caps to multi-billion-dollar valuations, while securing hundreds of millions in government funding. Post-merger leadership would combine military, industrial, and policy expertise, which is exactly what matters when operating at the intersection of national security and commerce. That said, risks are real. This is a small-cap play. The merger is not guaranteed. Regulatory approvals, shareholder votes, and execution all matter. Timelines are long. Capital requirements are significant. Always read the latest SEC filings before making any decision. Big picture, the U.S. government is sending a clear message. Critical minerals are no longer optional. They are strategic. Silver is part of that shift, and policy is driving the narrative. Trump's plan for silver fits perfectly into this broader strategy. 5 years of supply deficits, inelastic production, exploding demand, growing geopolitical tension. Section 232 provides the tools. The recent crash doesn't invalidate the thesis, it reinforces it. Whether we see actual price floors or just the threat used as leverage, the direction is clear. Silver is being repositioned as a strategic asset, and that's something no investor should ignore. Now I want to hear from you. Do you think silver is being underestimated right now? Drop your thoughts in the comments. If you found this breakdown valuable, hit the like button, share this video, and make sure you're subscribed to Stockora, because we're going to keep breaking down the stories that actually move markets. Thanks for watching. I'll see you in the next one. July 13th, 2026. That's the date markets need to remember. It marks exactly 180 days from Trump's January proclamation. That's the deadline for the Commerce Department to complete its Section 232 investigation and deliver recommendations. After that, Trump can act. Tariffs, quotas, price floors, everything is on the table. Between now and then, volatility is likely to increase. Smart money doesn't wait for headlines. It positions early. And we're not done yet, because there's a second piece of this story that could reshape the entire critical minerals landscape in the United States. Stay with me.